Hello, everyone. Thank you for joining. This is the live stream on the 15th of January, 2025. We are at EPSmomentum.com here helping you out, every investor in US stocks. So if you invest in US stocks, maybe you want to listen in. We're here to help you keep track of the really important metrics for this earnings season. Earnings season is starting soon. Actually, it is starting now. First few company reported. So we just want to make sure that you guys are all equipped with everything you need for earnings season. So today we're going to focus on the 5 things that are important for earnings season. How to spot great stocks and winning stocks for this first quarter. So quick introduction about the platform. The platform has about 14 applications here that you can click and run and open and close pretty quickly. It tracks a lot of things, a lot of metrics, obviously a chart, technical analysis, and other things. And it has a very powerful screener with a lot of filters and a lot of fields, more than 150 fields. So the first question investor would want to ask is, okay, what do I do? What do I follow? What are the most important things to track? And this is the question that we ask ourselves when we build the platform. So if you think about it, again, a company is all about sales and earnings, right? So a company is selling a product, making money out of it, right? So selling a product, making money, selling a product top line, that's the sales number, and making money out of it, that's the earning number, that's the bottom line. So it's really the top and the bottom line. The growth of those two metrics are very important, and even the acceleration. So this is what we're focused on the model here that we have. We track sales and earnings, and we look at the we basically score each company on sales and earnings, and we look at the growth and acceleration. When the acceleration happen here, the growth is increasing. Then we have like a rally. We have a growth in sales first, and then earnings, and then typically most of the time it leads to a rally in the stock price. This is what you want to know, and this is why EM is powerful. Our earning momentum model is powerful because it helps you detect just that. Actually, it helps us really even looking at it on the chart and focusing at it on the chart, and it makes it super easy. So here I can see EM 10, 30, 30, 20, 18, 1, minus 14, minus 15. So you see how this earning momentum got negative from 10 to minus 2, minus 8. Stock price went down and down, and then it started turning around, minus 15, 14, 1, 18, 20, and then the brass rallied twofold from there. So this EM model is very important to pick good stocks that have a decent earning momentum. A good one is even better, but a decent one above zero is great. Everything that is above 20 is truly impressive, and you get a good stock there. That's useful. So that's really sales and earnings. Those are the two first metrics you really want to focus on. And for that, you have the EM, but the EM is composed of those two variables, sales and earnings. You'll find it on the matrix here where I can track the sales first, and earning and sales last year, sales this year, and then the change from last year and this year, and even the acceleration. Acceleration is a really something that's really overlooked, but it's something that is truly important. So first, having a great growth this year, 23%, 25, 27, you can see the acceleration is positive. But in the last 2 quarters, that growth here is slowing down, -5, -3. So it's decelerating. So maybe it's a time where the growth will decelerate. Hence, maybe the stock price is plateauing and may heading downward. That's for sales. Same for earnings. Let's see. Yes, we got great growth, 168, 178, 78. some acceleration here, but then deceleration, right? Deceleration in earnings, not good. That's why the EM is reaching a 10 now. It used to be a 30. Now it's a 10, and the stock is plateauing and again, maybe heading down. So again, sales and earnings are two very important metrics, but the growth and acceleration of these two are even more important. That's what really institutional investors are focusing on. So again, those two metrics, including the growth and acceleration, is something that you need to follow really closely for your investment. Now, how do we go and find all these stocks that have these characteristics? So it's very easy. You go to the screener, and then you have the EPSM analytics, and then you have the earning momentum here. And you can filter on that earning momentum and hone in only on stocks that have positive earning momentum, let's say at least two. And it filters from 5,000 stocks to 1,000. So that's really good. And then the second thing, you can go into EPS matrix here and really focus on earning growth from this quarter to 4 quarters ago and monitor the change here. So say I want that growth to be at least 10%. Why not? And the acceleration. So I want the acceleration from the previous quarter to be positive, right? So greater than 0. Let's make it greater than 1%. Okay, so that's 500 stocks now, 541 stocks that I can focus on. You can reorder the columns if you want. I'm going to throw in a little bit of a market cap here because I want liquid names. So 2 billion in market cap. And now I have 267 stocks. So that's good. That's very important. Now let's have a look at sales as well. You can do the same thing on sales, but what you can do. So let's put some sales filter here. Sales filter, and have some sales growth that is again, maybe 10% as well. 10%. Here it is. And now we're down to 213 stocks. Now, what I can do is I can also say I want that acceleration to be sequential. So I want positive sequential. You can always click on any of those little eye icons to get definition. So sequential positive EPS acceleration, or sequential sales, positive sales acceleration. So I'm going to remove this. And so this is the number of sequential quarter and positive acceleration in sales for the company. So here, this is a very stringent filter. So, at least I want it to be 1 or 2. So now I'm 162. So let's click on Agnico Eagle. I can see the acceleration has been there for at least one more quarter. So 2 in a row, uh, at least. And let's take a look at the name. So the name had no momentum, then 19. See how this is really important. The company had zero momentum or negative momentum, EM -9, -7, -15. Then it become EM 19. It was $44, now it's 80. So it doubled in less than a year. And the momentum went from 19, 22, 17, now 25. And it's all high up there. The earning per share here is positive. Sales is positive. Growth is positive. Effing is positive here. And I have 2 acceleration in earning per share and 1 acceleration in sales. So I can filter further and ask for 2 quarters in a row of acceleration in sales. And that will really drastically bring the number of stock down to 95. Okay, so I can click on AMD, for example, and look it up. I'm switching to sales. I can see an 18% growth in sales, 2 quarters in a row of acceleration. However, the stock is really down. For some reason, it's really down. Maybe there's more to it. The earning per share is here. Acceleration is here. Same Same here, sales and acceleration. Actually, the growth is improving, but it's been tech has been down recently, so maybe it was a sector move, um, and that you can see there. Um, and this is a pretty much a good time to introduce the timing. So the timing of those three indicators that you see here is, as we can see, the price going down. This is a good stock. EM14 is pretty impressive. Is it a good time to buy? No, it's not. So it could be a great stock, not a good time, or a good time and not a great stock, right? So it's not a good time to buy. And so what do we need to follow here? You need to follow those three metrics, the timing momentum. So timing momentum is really, is it a good timing now? If it's above zero, great timing. If it's below zero, not a good timing. And clearly, not a good timing there. It's steering you away, keeping you away from the stock, because it's all of these almost always below zero, right? The yellow is a green, is the 3-day window of the green. So as the green really start collapsing, the yellow is already negative. So that's really a short-term window of the green. So again, when you invest, you need to take several time windows into consideration: the daily, the weekly, and the monthly, or the intraday, and that'll make it a little bit more sturdy. The blue is the market score, so it's really the stock to the S&P, and we can see that it's negative, so it's underperforming the S&P. So you don't want to be in that stock right now. It's all underperforming. Two of the three metrics are down. We can see it on the signal here. Two of them are down, and one is positive. So yeah, not a good thing. So this keeps you away. So how about we filter with TM? We filter with TM here, and we want some positive TM, timing momentum, right? Again, if you don't know the definition here, you can click on the I here. It gives you a definition, and off you go. Okay, so now we have 49 stocks, and we can have a look at it. So ANSYS. So let's see. The stock is flat. It's been flat for quite a while actually, but it's EMM 14. We have some acceleration in sales. We have some acceleration in earnings. Pretty good growth. This is interesting. So the reason it has a 14 and not a higher score is that the earning per share is 258 today. The previous quarter was 141, and the quarter before was the 8 quarters ago was 177. So you can see there's a dip last year, and then it rallied back up. So that 83% is a fake 83%. It shouldn't be. It's really the growth compared to 2 years ago, 177. So that number last year should have been 2.2 and then 2.58, right? That would have been a growth, a steady growth up, and maybe up 10%, right? Not 83. The reason it's 83 is because 141 is weak, right? So this is fake growth. That's why the EM doesn't reach the 20, right? So again, we take linearity and regression in earning per share and sales, and that's really useful for you. So you don't have to compute the number, just watch that number there. Okay, the EM has been positive, actually negative here, positive here. So it doesn't really outperform. So that'll be a pass. We can look at Broadcom, AVGO. Let's have a look at this. So sales, 50%, 47, really tremendous sales. Acceleration as well, 30%, 8%, 4%, 3%. See how the acceleration is declining. So it's accelerating less, so decelerating a little bit. On earning per share, 7, 18, 28. That's pretty good. Accelerating at a 9% clip, so that's great. EM's 19. And again, look at how it was negative, -4, -2, -14, and then 5, 4, 5, and then 19. So really, really great acceleration there. If we go back in history, let me make the chart a little bit bigger here. If we go back in history, we can see that the EM was negative, -12, and then 5, 11, 13. and then 12, 13, and then 34, 31, 18, 9. So that would be, this is a trigger here, like a special zone that predicts that there's really abnormal growth. And then start from there, from $40 rallies to 224. So really impressive rally, um, that you can spot, and really by just looking at the EM. All right, so we filtered on our TM. So really, sales, earnings, price. So those are three very important metrics, and then the growth and acceleration. Those are the five key points that you need to watch for this earnings season, right? And of course, look at the price, look at the timing momentum. That's for sure. Now let's add two more bonus little uh, metrics for this analysis. So instead of just looking at fundamentals and price, we are going to look at flow, the flow of money. So first, the flow of money inside the exchange. I mean, in dollar amount. So this is the dollar flow. So the dollar flow is really the value traded in the stock versus out the stock. So, any positive day with huge volume and value going in, we would have a major spike in that green curve here, and then the stock price here you see is rallying depending on that. So here, huge push, a huge push as well, rally, and then money is kind of drying out. The price as well, really negative here. Price is kind of going nowhere. A little bit of a push here, it goes back to new highs. Then the money dries out, and then major push, and then the price goes up, right? So really important there. What we want to see is, if it's below zero, it's kind of weak. There's no real positive pressure. But if it's above zero, it's strong. So you can find those metrics here the um, um, into the price statistics. And the price statistics, it's the dollar flow flag, and you want that flag to be strong, right? So if that flag is strong, tweaking the TM a little bit, all strong. Now we have 13 names. I can click on, let's say, let's pick a big gap here. Natera, for example. There you go. So see strong money or value flow going in, there above zero, and so that's important. The second and last thing for today is the dark short. So the dark short is really the flow of institutional money going into the stock. So this is traded outside of the exchange. Yesterday was 48% of the total volume traded, outside of the exchange. So that is really impressive. And it's, so here we 81 percentile, so it's almost at the highest. I mean, that huge bump here is at the highest, but it's almost at the highest. What does that mean? That means that institutional managers or investment managers and hedge funds are buying from the market makers who are forced to go short to deliver those shares to those buyers. So read it as buy side buying off exchange rather than dark shorts. So it's basically OTC, um, major whales or big volume ticket traded outside of the exchange. So some of that flow is also retail flow that's been packaged into baskets, right? So it could present retail flow packaged to baskets, but really those institution trading with market makers or brokers or banks, so fronting them. The interesting thing in the way we do the metrics here is we look at the dog slope, um, 10 days, the price slope 10 days, and we see if that slope is positive. So, for example, the stock price slope is positive and the dog slope is kind of negative. I mean, although here it's like a debatable. Let's pick another name, see if we can prove it a little bit better there. Yeah, so see, this is divergent. So let's have a look at this. So the dog short is declining, and the price of a 10-day is kind of up. So whenever you have a divergence, it's key. Why? Because that means that either the flow is receding and the stock price is up, so that calls for a correction, or opposite, the flow is insanely high and big buyers are purchasing the stock off exchange without you guys noticing, right? And the price is still down or not up, and it will eventually turn around and go up. So how do you spot these divergence? Well, you go into the screener and you click on stock short signal, and you look for divergence, right? Okay, so now I have 7 stocks that have divergence in dock short, very strong money flow, and like decent earnings. So let's have a look at this bio and tech, right? So we have divergence in slope here. So see the slope is down. The price is it's kind of overall up, but lately down. So not sure if it's super relevant there. The value is positive, but heading downward. Again, kind of it says strong above zero, but barely up above zero. Let's have a look at the matrix. We get a 22% growth in earning per share, 300 and something percent acceleration, and sales 40%. So something's happening this year. Although it doesn't look pretty because it was very high up 2 years ago. So again, I think we should be more stringent on the EM. So again, this is something that you can correct. So we can be maybe little bit less stringent on the acceleration, a little bit more tolerant on the market cap, but more stringent on the EM. So let's pick an EM equal to 20. So now I'm getting really, really stringent there. I'm going to remove those sequential quarter of acceleration. I'm going to include some of the market cap. And now we have what's left. Let's do the TM equals 0. All right, so we have AppFolio and so on. So let's click on AppFolio. Famous name there. We can see EM21. It's been quite a ride. Negative, positive, 6, 8, 22. So you would have known here at 104 that you're onto a winner, right? And the green would have kind of the time momentum kind of really keep you away from the stock, all negative all the way there, almost minus a few blips here and there. And then the first real positive, I mean, significant for several days is here. So that would be the time where you would potentially look at it at $116, and now it's 246, right? So again, very interesting. Let's have a look at the dollar flow. So the dollar flow is positive. The wow, this is really impressive. This is the 98th percentile dark short. So that means a lot of investors are buying this name behind the scene, and the stock price is declining. So see, this is a tell. I mean, this tells a lot. This is picture is 1,000 words here. So really, institution pushing the name, buying the name, and price declining. right? So this is the type of stock that you find using EPSM. And by the way, if you want to have these slopes and dark short here in there, you can. You just need to, um, have them added to the chart. You click on data here, and you have them added to the chart, and you can see them in history. So what do we have here? We have 21. We can see the very high up dark short. We can see a positive dollar flow. So yeah, that's see how the dollar flow is pushing up that rally there. It's also pushing up this one. Then it recedes here, and then you have the drop there. So yeah, I mean, this is really really valuable. So what you need to do for earning season is use the two fields that are in the description here. Let me clear that up a little bit, make it cleaner. Last report date and next report date. So you click on next report date, and then what you have is the ability to filter for the stocks that report in the next 10 days or 12 days, for example. And there's not going to be many. There's one. So AppFolio is the one that reports in the next 12 days. That has all the characteristic that we put in. But yeah, I mean, maybe if we remove a little bit of a filter here, we have more names. No, not even. Okay. So yeah, this is how you monitor earning season. Every day you're gonna have new stocks joining that search. What you do is you click here and you click on save, and it will save the screen here, and help you. Every day you can go log in, run that screen, and it will spot interesting stock for you, monitoring the acceleration, the growth, earning, sales, price, but also dollar flow and dark short. If you want emails, daily emails to your mailbox, you can just check those boxes. You can subscribe for that. We're 50% off right now, $29 a month on an annual basis. So it's truly a steal. So sign up. You can get training and webinars for our subscribers, and yeah, you'd be really pleased with what the platform can do for you and help you for earning season. That's it for me for today. Thank you for your attention. I hope it was useful. Let us know in the comment if you liked it or not. And thank you very much for your time. Thank you. Bye bye.